Welcome to the Energy Minute with Energy Capital and Power, where we summarize Africa's energy news. This week, we discuss Libya's growing oil sector, which has seen an uptick since the formation of the Government of National Unity earlier this year. Energy Capital and Power Senior Director James Chester tells us more.
With Africa's largest oil reserves, OPEC member Libya has been a jewel in the crown of many of the world's international oil companies. In 2021, following years of conflict and instability, hopes are high that Libya's oil production could be on the rise, and that international operators and service companies could once again invest in Libya's oil and gas sector. The Government of National Unity, headed by Prime Minister Abdulhamid Dabiba, was formed in March 2021. A key measure to stabilise the sector included the restoration of the Ministry of Oil and Gas, bringing greater structure to the industry. The Government of National Unity is also prioritising power infrastructure development, including renewable energy. Recently, European embassies have reopened in the country, and the National Oil Corporation in Tripoli last week was able to reintegrate its parallel organisation in the east of the country, further uniting the sector. Also in the last week, UK company Petrofac signed a €100 million contract for an early production facility with an NOC subsidiary. Libya is exempt from current OPEC production cuts and is targeting production of 1.5 million barrels per day or more by the end of the year. Endorsed by the Office of the Prime Minister and with the full support of the Ministry of Oil and Gas and the National Oil Corporation, ECP will hold the first in-person energy summit in Tripoli for over a decade this November. We invite all companies operating in Libya or looking at investing in the country to participate. Visit www.libyasummit.com for more.
For more information about Libya's energy sector, visit energycapitalandpower.com/news.